It is Sunday, March 8th, 2026. Comex is dark. New York Stock Exchange is dark. The London bullion market is dark. Every traditional financial exchange that silver investors have relied on for price discovery, every exchange where professional traders, hedge funds, and central banks normally express their views on silver is completely offline right now. And in the last 48 hours, more than $1 billion of silver changed hands anyway. Not in London, not in New York, not on Comex. On a decentralized crypto exchange called Hyperliquid, a platform that most silver investors have never heard of, silver perpetual contracts logged over $1.1 billion in 24-hour trading volume, making silver the third most actively traded asset on the entire platform, sitting behind only Bitcoin and Ethereum. Let that number land for a moment. $1.1 billion in silver on a crypto exchange, while Comex was closed. On February 28th, coordinated strikes hit Iranian nuclear facilities, while most benchmark commodity markets sat dark. Traditional gold futures on CME's Comex exchange would not reopen until Sunday evening Central Time, leaving a 48-hour window where macro risk had nowhere obvious to express itself, except it did, on venues that never close. By the time Comex futures flickered back online Sunday at 5 p.m. CT, perpetual futures contracts tracking gold and silver on always-on derivatives platforms had already written the first draft of Monday's gap. Traders did not wait for permission. Y charts. They repriced silver without you, while you slept. And when Comex opened Monday morning, it did not set the price. It caught up to a price that had already been forming for 48 hours somewhere else. That is what I'm going to show you today. Exactly what happened, exactly how much silver traded, exactly where the price went when Comex was dark, and exactly what this means for every silver investor who thinks they understand how silver gets priced. Every number I give you is public and verifiable. Links in the description. Section 1. What Hyperliquid is, and why you have never heard of it until now. Before I show you the billion-dollar number in detail, I need to explain exactly what Hyperliquid is, because understanding the platform is the only way to understand why what happened this weekend matters for silver investors. In traditional finance, gold and silver are viewed as primary hedges against inflation. However, for crypto-native investors accustomed to high-frequency trading and non-custodial wallets, traditional commodities markets often present hurdles such as restricted trading hours, slow settlements, and mandatory KYC procedures. 99 Bitcoins. Hyperliquid solved those hurdles with a specific technical architecture. It is a fully on-chain order book, meaning every trade, every bid, every ask is recorded on a public blockchain in real time. Unlike traditional exchanges that operate through centralized clearinghouses, Hyperliquid's trades settle automatically through smart contracts with no middleman, no clearing delay, and no weekend hours restriction. The platform activated HIP-3, Hyperliquid Improvement Proposal 3, in October 2025. This upgrade democratizes the creation of perpetual futures markets. With HIP-3, anyone can permissionlessly deploy their own perpetual futures markets on Hypercore, Hyperliquid's core infrastructure, by staking at least 500,000 HYPE tokens. Yahoo Finance. What does that mean in plain language? It means that in October 2025, Hyperliquid opened its infrastructure to anyone who wanted to create a perpetual futures contract for any asset with a reliable public price feed. Silver has a reliable public price feed. Within weeks of HIP-3 activating, silver perpetual contracts appeared on Hyperliquid. Within months, those contracts were trading billions of dollars of volume. Trading on Hyperliquid does not involve physical bullion. Instead, it utilizes perpetual contracts based on price oracles. This model allows users to use stablecoins such as USDC as collateral to go long or short on precious metal prices. The platform offers leverage up to 50 times on these contracts. 99 Bitcoins, 50 times leverage on silver, on a platform that never closes. That is the infrastructure that priced silver this weekend while Comex was dark. Section 2. The January 27th event. The first time the world noticed. The weekend of March 8th is not the first time Hyperliquid silver became a story. The first signal came on January 27th, 2026, and almost nobody in the traditional silver market paid attention. During U.S. morning hours on Monday, January 27th, silver traded around $111 on Hyperliquid and logged over $1.25 billion in 24-hour volume, making it the third most active market on Hyperliquid behind only Bitcoin and Ether, EFGA partners. Silver's 24-hour trading volume surpassed Solana and XRP. Silver could surpass Ethereum's $141 billion in trading volume as demand for safe haven assets rose amid Trump tariffs, macro fears, and de-dollarization sentiment. CryptoSlate. One specific trade from that day is documented and public. A whale tracked by Look and Chain, wallet address 0rack61CE, shorted over $45 million worth of silver on Hyperliquid with 20 times leverage, and subsequently closed the position at a loss, but still held 352,124 silver contracts worth $38.74 million in long positions. Crypto slate, $45 million. Single wallet, 20 times leverage, short silver on a crypto exchange. That is not a retail bet. That is an institutional scale position expressed through crypto infrastructure because the trade could be executed at 2:00 a.m. on a Sunday when Comex was closed. What stands out is not silver's price alone, but its prominence. Silver sat right behind BTC and ETH pairs in volume, according to CoinGecko data, and ahead of Sol and XRP. When a commodity contract rivals major crypto assets for volume on a decentralized exchange, it suggests traders are using crypto infrastructure to express views that Bitcoin and Ether no longer capture efficiently. In other words, crypto plumbing is being repurposed for macro trades. Yahoo Finance, crypto plumbing being repurposed for macro trades. That sentence is the entire story. The infrastructure that was built to trade Bitcoin is now being used to trade silver, because silver is where the macro action is, and because silver is available 24 hours a day, 7 days a week on Hyperliquid, when Comex is not. Section 3, February 28th, the weekend that changed finance. January 27th was the warm-up. February 28th, the night the Iran strikes happened, was the main event. In the past, investors facing such a major geopolitical shock on a Saturday would have been forced to wait until U.S. futures reopened Sunday evening to start pricing in an expectedly chaotic Monday. This time, however, they had a genuine alternative: crypto-based platforms that trade 24 hours a day, 7 days a week, and 365 days a year, globally accessible and settling transactions almost instantly. The standout choice was Hyperliquid. Kitco Hyperliquid's 24/7 perpetual futures market saw record open interest exceeding $1.1 billion, driven by increased trading activity in commodities and equities derivatives. Traders used Hyperliquid to hedge geopolitical risk by trading synthetic assets tied to oil, gold, silver, and U.S. equities. Comex Live now, here's the specific finding that every Comex silver trader needs to understand. Not just that Hyperliquid was open, but that Hyperliquid was accurate. When geopolitical risk erupted that weekend, Comex was closed, but Hyperliquid and Binance remained open. Both platforms continued trading gold and silver perpetual contracts. Analyst Kunal Doshi measured what happened during peak volatility hours. Hyperliquid's gold and silver perpetuals were priced at a median premium of roughly 75 to 78 basis points above Binance's equivalent contracts. More importantly, when Comex reopened, Hyperliquid's weekend price sat closer to the first benchmark print than Binance's tape by approximately 22 to 31 basis points. Gold Silver read that carefully. Hyperliquid was not just trading silver when Comex was dark. Hyperliquid was pricing silver more accurately than Binance, the world's largest cryptocurrency exchange, and its prices were within 22 to 31 basis points of where Comex opened Monday morning. The reopening is starting before it actually opens. That is not ideology, but infrastructure responding to the reality that geopolitical risk does not respect CME Globex maintenance windows. The market that does not sleep is becoming the market that explains the gap, and legacy venues will either extend their hours or accept that someone else writes the first draft of Monday. Y charts. Someone else writes the first draft of Monday. This weekend, that someone is Hyperliquid. Right now, tonight, while you watch this video. Section 4. The Matt Hugin Memo. The weekend that changed finance. In a memo published on Tuesday, Matt Hugin, Chief Investment Officer at Bitwise, described the Iran weekend as the weekend that changed finance. Kitco. That is not a crypto promoter. Matt Hugin is the CIO of Bitwise Asset Management, one of the most respected institutional crypto research firms in the world. When the CIO of an institutional asset manager publishes a memo calling a specific weekend the weekend that changed finance, that is a primary source document. That is someone with access to institutional capital flow data telling you that something structural shifted. Critics will point out that crypto markets remain smaller and more volatile than their traditional counterparts, and that regulatory and operational risks persist. However, the events of the past weekend showed that on-chain finance is moving from the fringes to the core of global capital markets far faster than most forecasts anticipated. Kitco. As a decentralized perpetuals platform, it was one of the few venues actually open and liquid when the Iran headlines hit, and in a weekend event where centralized venues are closed off to face thin liquidity, Ryan McMillan, Chief Investment Officer at Merkle Capital, told Decrypt. Geopolitical shocks make the case for non-custodial, always-on trading infrastructure. Institutions leverage these always-on markets to anticipate moves in conventional venues, using on-chain perpetuals to hedge before broader markets open. Dominic John, analyst at Kronos Research, explained, adding that such a function positions decentralized venues for early risk pricing. Early risk pricing. That is the institutional phrase for what happened. Institutions used Hyperliquid to price silver before Comex opened. And when Comex opened, it followed the price that had already been set on a blockchain while Wall Street slept. Section 5. What this means for the Comex. The implications nobody is saying out loud. Let me now connect this Hyperliquid story to the Comex delivery crisis that this channel has been documenting for months, because these two stories are not separate. They are the same story told from two different angles. Comex silver right now, 85.29 spot, 429 million ounces of paper open interest against 86 million ounces of registered physical vault inventory. Coverage ratio of 0.14. Daily vault drain of 785,000 ounces. March 27th, last trading day, is 19 days away. That is the Comex reality. And Comex is dark this weekend. It cannot react to news. It cannot price the Hormuz closure. It cannot price Trump's unconditional surrender post. It cannot price the Qatar force majeure declaration. It can do nothing until 6 p.m. Eastern tonight, when the electronic session opens. But Hyperliquid can, and Hyperliquid is, right now. Hyperliquid processed over $200 billion in monthly volume in early 2026 and saw its silver perpetuals log over $1.1 billion in 24-hour volume during recent geopolitical stress. Metals hedge. Here is the structural implication that no mainstream outlet is stating clearly. The Comex paper silver price, the 85.29 number, is set during Comex trading hours, Monday through Friday, 45 hours per week maximum. Hyperliquid silver trades 168 hours per week, 7 days, 24 hours, no maintenance windows, no weekend dark periods. The Comex is becoming the part-time venue for silver price discovery. Hyperliquid and platforms like it are becoming the full-time venue. And when the most important news events, Iran strikes, geopolitical shocks, weekend margin calls, happen outside Comex hours, the price that matters is the one that forms on platforms that never close. DEX Perpetual's market share rose from 2% to 10.2%, propelled by Hyperliquid, the sole DEX among the top 10 perpetuals exchanges, recording $159 trillion in 6-month volume. Y charts $1.59 trillion in 6 months. From a platform that did not exist in its current form 2 years ago, the shift is not coming. The shift is documented and already in progress. Section 6. The risks. The bear case on Hyperliquid silver. I always give you both sides. The bear case on Hyperliquid silver as a price discovery mechanism is serious, and you need to hold it. While high liquidity and 24/7 access offer convenience, the risks of liquidation due to high leverage remain significant during volatile price swings. Data shows that during a recent silver price swing, liquidation totals on the platform were second only to Bitcoin, serving as a reminder of the risks inherent in decentralized trading. 99 Bitcoins. 50 times leverage on silver. When silver moves 10%, a 50 times leverage position loses everything. And in the Comex delivery crisis environment we are currently in, silver moving 10% in a single session is documented history. It happened multiple times this year. Hyperliquid silver, with 50 times leverage in a Comex delivery squeeze, is not a risk management tool. It is an amplifier. Cascading liquidations on Hyperliquid can push the Hyperliquid price dramatically away from the Comex price temporarily before the arbitrage closes the gap. The platform's lack of compliance guardrails could introduce substantial legal hurdles in the future. Offering synthetic U.S. equities to retail investors without KYC protocols or a registered broker-dealer license poses significant regulatory risks and could draw future scrutiny from the SEC and CFTC. Discovery alert. Regulatory risk is real. The CFTC has specific jurisdiction over commodity derivatives. Silver is a commodity. Hyperliquid is offering leveraged silver perpetual contracts to retail investors globally with no KYC, no position limits, and no margin supervision by any regulated entity. That exact description matches the regulatory profile of several platforms that have faced enforcement action. If CFTC targets Hyperliquid, the silver perpetual markets on the platform could be restricted or shut down, and if that happens during a period when institutional flow is using Hyperliquid as a weekend hedge, the disruption to price discovery would be significant. The third bear argument, Oracle risk. Contract prices rely on external data feeds. Delays or errors in Oracle data can lead to unfair liquidations. 99 to 99 Bitcoins. Hyperliquid's silver price is not derived from actual silver trades. It is derived from a price oracle that reads the silver spot price from external feeds. If that oracle gets a bad data input, a flash crash on a thin weekend market, a data provider outage, a coordinated oracle attack, Hyperliquid silver price can diverge from reality, and with 50 times leverage available, even a brief oracle error can liquidate enormous positions before the error is corrected. The fourth bear argument, this is still a small market relative to Comex. In absolute dollar terms, Binance dominates. For gold, Binance's share relative to Hyperliquid rose from a low of 54% to 93% during normal trading hours. Gold-silver Hyperliquid's price discovery advantage is specifically during weekend periods when traditional venues are closed. During normal weekday trading, Comex dwarfs Hyperliquid in both volume and open interest. The Hyperliquid silver market is important when nothing else is open. It becomes much less important when Comex is running full sessions. Section 7. Tonight's specific setup. What to watch right now. I sell nothing. No memberships, no Discord, no paid alerts. If you see my name on any paid service, that is not me. You find me here on YouTube and on X, where the data breaks as it happens. Here's your specific watch list for right now through Monday morning. First, Hyperliquid Silver live price. This is public and free. Go to app.hyperliquid.xyz and search Silver USDC. You will see the current perpetual price in real time. Compare it to Friday's Comex close of $85.29. The gap between those two numbers right now, as you watch this, is what the market that never closes thinks silver is worth after 48 hours of Iran war news, Qatar force majeure, and Trump's unconditional surrender post. That is the real-time signal. Second, Hyperliquid Silver open interest. On the same page, look at the open interest figure. When the Iran strikes happened February 28th, open interest on Hyperliquid Silver exceeded 1.1 billion. If open interest tonight is approaching or exceeding that number, the institutional flow that used Hyperliquid as a weekend hedge during the first Iran shock is back for the second weekend of the war. Third, Hyperliquid Silver funding rate. The funding rate tells you whether longs are paying shorts or shorts are paying longs. A positive funding rate means the market is net long, more buyers than sellers at current prices. A negative funding rate means the market is net short. During the Iran weekend, Hyperliquid's funding rate was positive early in the weekend. Longs paid shorts, indicating net directional demand for upside exposure. By Sunday evening, as traders positioned ahead of Comex's reopening, the funding rate edged slightly negative. Gold-silver watch where the funding rate sits tonight versus where it was when Comex closed Friday. Fourth, Comex electronic session open at 6 p.m. Eastern. This is the moment when Comex catches up to whatever Hyperliquid has been pricing all weekend. If Hyperliquid Silver is running significantly above 85.29 when the electronic session opens, Comex will gap up to match it. If Hyperliquid has been flat or slightly below, Comex opens flat. The Comex electronic session's first 30 minutes tonight will be Comex reading Hyperliquid's weekend homework and deciding whether to agree with it. Section 8. The honest conclusion. What the $1.1 billion actually tells you. Here is the full picture as of Sunday, March 8th, 2026. Comex Silver, 85.29s. Registered vault, 86 million ounces. Paper claims, 429 million ounces. Coverage ratio, 0.14. Days to March 27th, deadline 19. Hyperliquid Silver, live right now. Public, free to check. Trading 24 hours a day, 7 days a week with up to 50 times leverage. $1.1 billion in 24-hour volume during the last major geopolitical shock. Pricing silver 22 to 31 basis points closer to the Comex reopening price than the world's largest crypto exchange. For the first time in many observers' memories, crypto markets were effectively the market during the weekend of the Iran strikes. Kitso, that is a documented fact, not a prediction, not a crypto promotion, a documented fact from a respected financial journalist at Euronews writing about the specific weekend that began this war. What it means for you as a silver investor is this. The price of silver is no longer determined solely by Comex during its limited trading hours. There is now a parallel market, technically accessible to anyone globally, 24 hours a day, that prices silver in real time based on whatever news has happened since Comex closed Friday. That parallel market does not hold physical silver. It does not replace Comex delivery mechanics. But when Comex opens Monday morning, it does not set the price. It reads the price that was already set elsewhere, and it adjusts accordingly. 3 scenarios for tonight and Monday morning. Scenario 1. Hyperliquid Silver is trading at $88 or above right now. That means the always-on market has priced in the second weekend of the Iran war, the Qatar force majeure, and the Trump unconditional surrender post as bullish for silver. Comex electronic session opens tonight, catching up to $88. Monday morning gap up of $3 to $5 from Friday's $85.29 close. Institutional flow that used Hyperliquid as a weekend hedge shows up Monday morning buying Comex to close the basis. Scenario 2, Hyperliquid silver is trading between $85 and $80. The always-on market is holding the Comex close with modest upside. Comex electronic session opens flat to slightly up. Monday morning opens in the $86 to $88 range as ceasefire uncertainty keeps the war premium from expanding further. This is the base case. Scenario 3, Hyperliquid silver is trading below 85.29 right now. A diplomatic breakthrough, ceasefire signal, Oman mediation announcement, UN framework talks has hit over the weekend, and the always-on market has already priced it bearish. Comex opens down Monday. Silver tests the $82 support level. This is the bear case scenario. Go check the Hyperliquid silver price right now. The answer to which scenario is playing out is on that screen. Public, free, available right now. While Comex sleeps. The market that never closes has already written Monday's first draft. Your job is to read it. Invest with logic, not hype. The infrastructure that determines silver's price has changed. The only question is whether you found out before Monday morning or after. Drop Hyperliquid watch in the comments if you are tracking the Hyperliquid silver price tonight. And drop gap up, flat, or gap down to tell me what the screen is showing you right now from wherever you are sitting.